Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, guys. Let's take a look again on the euro as usual. So on the market we see a price action that actually confirms our suggestion and our doubts that not everything stands good with a possible bullish action. So in the weekly report we talked about our suspicions on the current situation, and we said that we see some signs and some fundamental issues that makes us think that in the nearest term hardly euro will show any significant reversal, because the price action tells on the erasing on the former driving factors and erasing the reaction of the market on these factors. So if you remember, last week was under sign of the dollar weakness, and so a lot of talks was about rate cut, new tariffs, and that should impact on the United States economy, and that has triggered this pullback. But that was not really stands for too long, and very soon at this moment it was indecision, and market turns in opposite direction, especially on the background of significant drop on the yields in the United States. But at the same time, the overall statistics on the economy United States stands in general not really bad. Well, and as a result, you can see this reaction of the market. So rally has been erased on this decision-making moment. Market has chosen direction to the downside. On the way down, market also has erased all support levels, extensions that potentially could be used for reversal if market really stand bullish and just search chance to go in opposite direction, go up. But the fact that market has broken all of them, and this was relatively fast and strong, makes us think that we should be ready for a downward continuation. In the nearest future, the nearest target stands on the daily chart around previous lows. It's approximately 110 area, because here actually we have, guys, two different patterns in place. First is our initial A, B, C top OP target has been hit, upward bounce. XOP stands significantly lower. Actually it corresponds to extensions of our butterfly. So if you use extension of this recent swing, if you remember, that was our butterfly here. This was left wing of the butterfly, is right wing, 127 extension, OP target also, AB equals CD, pullback, significant pullback, 56%. Now markets are returning back to them. Next destination point by this butterfly stands at 109.15 approximately. This is 1618 extension, and XOP of the same ABC top pattern also stands there. As it's more extended and actually it stands below the daily average sold, we are not interested with it right now. We're interested in the nearest standing target, what market could achieve in the nearest time. And these points on this COP, somehow it marked by the XOP. Of course, it's not XOP, this is contraction objective point, so COP. No, just 618 extension. That's what we will be focused on in the nearest few sessions. For a market, it will be relatively simple task, just because market stands already below the major 618 support. It has broken all extension targets, so this is relatively free space for the market, and it easily could reach it. Another important detail is take a look that COP stands below the recent lows. It means that these lows hardly will hold, and here in such situation we have to take into consideration the stops that have been placed here, and once market will trigger them, this will add fuel to the downward action. So stops will start to work, people start to sell, and that add more fuel to the downward action. which means that market could slip deeper below this area slightly. So maybe right to the monthly pivot support one. It's around 109.65, 109.70, just by inertia of this stops. Well, anyway, in the current situation, based on the intraday charts on the daily, I do not see sufficient context for taking any long position. So I do not see available background for that. And it seems that market could proceed lower. From that standpoint, maybe it makes sense to think about taking the short position. For example, we could use 4-hour time frame chart. Market is forming the triangle pattern, which is potentially bearish consolidation, bearish continuation pattern. Here is this triangle on the daily chart. It could take the shape of the pennant, even more, in a smaller pattern. And here we have a kind of the bearish dynamic pressure, because you can see that trend has turned bullish by the MACD, but price action is not. It's forming just triangle. If somehow the upward breakout will happen here, we could get guarded triple to sell. Take a look. This could be A, B, C, bottom, D pattern. So that will be left part of the triangle, triple to sell. This could become right part. So here you could watch for patterns, for bearish patterns. If something we will get inside of the triangle, well, maybe it could be used for that. If we will get guarded triple to sell, that's also will be the pattern that we could follow. Alternatively, you again could try to use, for example, stop entry order. So place the stop sell order somewhere near these lows. If market will start breaking them, probably it will continue move lower. So maybe it's not as attractive by the price, but in this case, you will be able to take the position right on the breakout moment. So in the current situation, this is relatively safe, because that is not a support for a market. Market stands not at the support. It's dangerous to place such levels around the strong support areas, around the oversold. But in the current situation, this is possible. So just watch for the patterns, guys, here. For taking the long position, we need to get some really bullish signs, which we do not have right now. Besides, if we take a look at the 4-hour time frame chart of the dollar index, you could see what's going on here. You can see this really market breaking through the XOP and just showing the upward continuation here, keeping this trend line support. On the hourly chart, it looks even more impressive. So you can see here is market has failed to show any reversal, kind of the hand shoulders or something of that sort, and just breaking this top and shows the consolidation here. So currently, I think that it's not time yet for taking any longs, and downside perspective looks more probable on euro currency. On the hourly chart, here's our minor hand shoulders that we talked about in weekly report as well, but it was really very small. Market just completed minimal target, but even with this target, market wasn't able to hit even 30% resistance of this action. So you can see nothing really could impress, and for taking nothing impressive actually for taking long position. It seems that market looks heavy, and chance on downward breakout looks more probable currently.